Hey, everybody. Just wanted to take some time today to get you some information on what happens from the time a Texas Real Estate Commission contract is executed and the different steps that it takes to get to closing. So, what I'd like to do is let me share a screen with you real quick and get you some information on, again, what happens from contract to closing. What does that process look like? Let's take a look here real quick. Let's go ahead and go. Here we go, guys. Let me start this slideshow from the beginning and contract to closing process. Let's take a look. Basically, what we need to realize when we're dealing with a real estate sales contract that's just been executed is you really have things happening simultaneously or concurrently, might be another way to say it. Number one, your buyer typically pays for an option period. What is an option period? Well, that's in paragraph 23. That is where the buyer will pay the seller a certain dollar amount for a certain amount of days. During that amount of days, they have the unrestricted right to terminate the contract. Typically, this is our discovery period, so to speak. Our buyer is finding out everything they possibly can about the property. Typically, they're going to get an inspection done. That inspection may lead to other inspections. They're going to make sure they can get homeowners insurance. They may want to verify that addition had permits done properly, things of that nature. The other thing that'll be happening at the same time is financing. Obviously, you probably did a loan app before closing. Now we need to get that contract over to our loan officer. They continue their process, and we'll go through that in just a couple of minutes. The other thing that will happen immediately is we will take earnest money to the title company. They will then start their title search. We want to make sure that we've got marketable title. So the contract states that within 20 days from the time the title company gets the contract, they have to issue you something called a title commitment. This will tell us what issues may be need to be cleared up before closing. It'll talk about easements and all of those types of things. And then finally, we'll get to closing and funding. But let's look at each of these pieces individually. The first piece that I want to look at is the option period. Now, in our sales agreement, it states that we must deliver the option fee within 3 days. That is 3 calendar days. You'll also notice that it is in green. Anytime a buyer has to cut a check or pay a fee, I have put it in green. And how much is the option fee? It's negotiable. It depends on the market that you're in and the type of market that we're in. So the option fee will be paid from the buyer to the seller. Very important. Right now, that option fee will go from the buyer to the seller. The next thing we've got, your buyer should be picking their own inspector. We need to get an inspection done. This is probably going to run anywhere from $300 to $600, depending on the size of the property, but the inspection would need to be paid for. One thing to be aware of on the inspection, just because the inspector finds something that is defective, the seller is under no obligation to repair that. Obviously, a buyer's got to feel comfortable with the inspection and any repairs that they request, but the seller does not have to agree to them. If the buyer is not happy with what's going on at this point in time, they would be able to opt out of the contract. They would not lose their earnest money, but they are not reimbursed for the inspection. They are not reimbursed for the option fee. Another thing that should happen during this option period is the buyer should get a clue report from their homeowner's insurance agent. Get an insurance binder at this point in time. We want to make sure that it's ready for when we get down there to the closing table. Now, what is a clue report? CLUE stands for Comprehensive Loss Underwriting Exchange. It's a database that insurance agents have to verify that all claims on a property have in fact been closed. Where we run into an issue here is maybe somebody received funds for a roof and they never got the roof fixed. Or maybe they did get the roof fixed, but they never closed the claim properly. So anyway, issues like that pop up, and this is something that the insurance companies all participate in just to verify that they don't take over a defective roof. So that's part of what's going on there. This will rear up its head every now and then on a transaction. So I do recommend that every buyer get a clue report on the property. It's not in green. There's no charge for that. Your homeowner's insurance agent should be able to get you a copy of that. Again, get your insurance binder ordered. Know what your insurance is going to cost you. Another thing that you might do is verify with the city, maybe permits, things of that nature. If you see any additions maybe on the property, take a good look at the county tax records, verify what entities are being paid taxes besides city, school, counties, things of that nature. You might be in a municipal utility district. That's going to add an additional tax. There's some disclosures and some forms that we need to get, that we would need to get from that municipal utility district. So all of this is done during our investigation phase. Again, we may want to get repair quotes. We're going to remodel. We're going to be doing different things. Do all of this during your option period. Get as much information about the property as you can, negotiate, and if there's any repairs that you want to request, we would do it at this point on an amendment to contract. Make sure you submit that amendment a couple of days before your option period expires. That way your seller's got time to respond, get their own quotes, figure out what's going on, maybe negotiate. But if you're happy with everything, we move forward, Mr. and Mrs. Homebuyer. If you're not happy with what's going on, they won't do repairs that you think are critical. At this point, the buyer does have the option of opting out. Again, you don't get your inspection monies back, you don't get your option fee back, but you would get your earnest money back. Let's go on to the next line. That would be financing. You'll notice I put loan application way out here. You really should have done a loan application before you started your home search. Most homeowners anymore are looking for a pre-approval letter. So typically you do your loan app before you get started. Once you get the contract executed though, we need to make sure we deliver a copy of the contract to the loan officer. The buyer needs to make sure they're turning in all documents, pay stubs, verification of bank statements and things of that nature. We do have in our contracts a third-party financing addendum. That is an addendum that describes the type of financing you're getting. What happens here is there is a number of days that financing is a contingency. That is to say, if a buyer finds out that they are not going to be able to get qualified for the loan, they would be able to back out of the contract or opt out of the contract during those days in that financing contingency. And again, you would get your earnest money back, Mr. and Mrs. Homebuyer, as long as you do it within that time frame. The lender is going to request an appraisal. Okay, the property has to qualify as well. Condition and value have to be there for the appraisal. You'll notice it is in green. It is typically anywhere from $450 to $500, depending on the type of financing that you're doing. Again, these are just estimates for you to kind of figure out what's going on. I would recommend not ordering the appraisal until you've got an acceptable amendment signed for any repairs that you might be requesting, Mr. Buyer. Okay, there's no need for a buyer to pay for an appraisal up front if we hadn't gotten out of the option period and we're not for sure that everything is good to go here. So anyway, buyer does pay for the appraisal. That is specifically stated in the contract. So here might be one other time that a buyer is cutting a check or paying some monies for a service that needs to be provided. The other thing that happens, buyer will update all documents. Now, another very critical thing during this financing period and from the contract to closing period, Mr. and Mrs. Home Buyer, do not change your financial situation. Do not change jobs. Do not go out and buy another vehicle. Do not co-sign on anything. Don't go out and buy a new stereo system 90 days, same as cash. It will show up on your credit report. They do pull a credit report on the day of closing just to get an updated record of where you're at. So again, please make sure that you're very careful and don't change your financial status. No large deposits in your accounts, no large deposits out of your accounts. Those are all red flags that'll pop up, and your loan officer will be questioning you on that. The other step, once everything is all put together, we've got the appraisal, all of your information on your personal finances, it will then go to the underwriter and the underwriting department at the lender. They are going to look through everything with a fine-tooth comb. They'll also be looking at the appraisal. Once the underwriter has looked at everything and they are happy and the loan is now clear to close, they will issue the closing disclosure. The closing disclosure would need to be given to you 3 business days before closing. So be aware of that CD, we like to call it. When you're receiving the closing disclosure, that's when you're just days from closing, typically about 3 days from closing. Now, before we do get to closing, let's go down and let's see what's happening at the title company. At the title company is where, when you executed the contract, within 3 business days, typically, the earnest money needs to be deposited at the title company. Let me say that a little different. You've got 3 days to deposit the earnest money at the title company. If the 3rd day happens to fall on a Saturday, Sunday, or a legal holiday, you've got till 5 p.m. the next day to deposit the money, end of business day, basically. So anyway, us agents will be watching out for that and checking that out. But we do need to get an earnest money deposit done within the first 3 days. Next thing, the title company gets a copy of the contract. Within 20 days, they will issue a title commitment. This will show liens that are on the property, who the current owner is, and this is basically the work of the title company and the title search that they did to make sure that there will be marketable title on the property. The other thing that the title company and the lender will be interested in is a survey. So sometimes we're using existing surveys, sometimes we are using surveys that are ordered brand new. If we are using an existing survey, there's an affidavit called the T47 Affidavit that will be signed by the seller stating that nothing has changed from the date of the original survey that we may be utilizing in the closing. But the survey will need to be approved by the lender and by the title company. So be aware of a survey and what's going on there. Basically showing where your fence is and maybe on a property line and how your property sits there, letting you know where easements are for utilities and things of that nature. The next step, order a home warranty. I highly, highly recommend that you get a home warranty. It does not fix everything that might go wrong, but it does give you some protection. Should an AC unit go out, it may be a partial payment. They may not cover older units and changes in Freon and things of that nature, but your home warranty folks can give you some more details here. Hot water heaters, things of that nature. Some of those things would be replaced with a home warranty, but get with some of your home warranty professionals and they can give you some more details there. I do highly recommend them though on any transaction. The next step, finally we get to closing. Option period's over. We're happy with everything that's going on. Financing is ready to go. We got a closing disclosure and the title company has said we've got marketable title. Now, let me go back a step. I think I skipped one up here. buyer walkthrough before closing. Go back and verify that the property is in the same condition as the day you got on contract, okay? You want to verify that all repairs were done. We typically recommend that you do a walkthrough. Maybe if you're closing in the afternoon, go that morning to the property and check it out. Verify utilities are still on. Utilities should be on during the entire time of the contract. But this is a time to verify that everything is in the same condition. So buyers, definitely recommend a walkthrough before closing. We go to closing at the title company. I've got that in green. The buyer will then be bringing the balance of any monies needed for their down payment and for their closing cost. This dollar amount will be on your closing disclosure that you get from the lender. At this point in time, the transaction will fund, and depending upon what was in your contract, you may be getting your keys at the closing table as a buyer, or the seller may be staying after closing due to a written lease, a temporary lease addendum. And if that's the case, then the seller will still be in the property. I would still recommend that you do a walkthrough though. Anyway, that is a brief look at contract to closing. Hopefully this was helpful for you. Reach out to me if I can ever be of any assistance. Thank you. This is Tony Delgado. Bye-bye.